Hi, and welcome to Edolab Markets. In this video we show you how Edo Equal Highs and Lows works. When price stops twice at almost exactly the same level, it leaves something behind, a cluster of orders resting just beyond it. This indicator finds those pairs automatically and draws the level they define. Red above price, green below. On the Consumer Staples ETF, for hours, there is one equal high at 89.01, and two equal lows, the nearest at 79.91. Two levels the market has already told you it cares about. That is the whole idea. Let's start with the upper side. An equal high needs two swing highs that stop at the same price. Here on Kava, for hours, the first attempt failed, price pulled back, and the second attempt died at the same ceiling. The moment the second one confirms, the line is drawn and labeled EQH. Above that ceiling sit the stop losses of everyone who sold it, and the entries of everyone waiting for a breakout. That is buy-side liquidity, a pool of orders the market knows exactly where to find. The lower side works the same way, mirrored. Two swing lows at the same price. Marriott, 4 hours. February and March bottomed at 310, within the tolerance the indicator allows. The line stays green and keeps extending to the right, because nothing has closed below it yet. Below it sit the stops of every buyer who bought that floor. That is sell-side liquidity. Price is up here around 375, and the panel is telling you the nearest untouched pool is $65 lower. Now the part that matters. What happens when price finally reaches one of these pools? Costco, 4 hours. Two lows in April at 957, equal within tolerance, and the level held for 2 months. Then in June price closed through it. The line turns gray and dashed, and the label gets across. That is the sweep. The liquidity that was resting under those lows has been taken. The indicator does not tell you what comes next. It tells you that the fuel that was sitting there is gone, and the level is no longer a reference. Crypto trades around the clock, and it builds the same structures. Stellar, 4 hours. Two lows at 18 cents in June, taken a week later, and the level grayed out exactly the same way. But look at the panel, because there is something you need to understand about it. It counts every level that is still alive on the whole loaded history, not only the ones on your screen. Here the nearest equal high is far above the current price. So read it as what it is, a count of untouched pools, plus the distance to the closest one. When that distance is huge, it simply means there is nothing pending nearby. Let's go through the panel properly. Darden Restaurants, 4 hours. First row, how many equal highs are still active, meaning formed and not yet closed through? Second row, the same count for equal lows. Third and fourth rows give you the nearest untouched level on each side, above and below the current price. Here there is one live level on each side, buy side at 217, which you can see on the chart, and sell side at 151, well below the visible range. A dash would mean there is nothing left alive on that side. For numbers, and you know where the pending liquidity is without measuring anything. Two highs are almost never identical to the cent. So the indicator needs a rule for what counts as equal. That rule is the tolerance, and it is measured in average true range, not in points or percent. Two swings are equal when the gap between them is smaller than a fraction of the current volatility. The default is 1/10. That is why the same setting works on something as violent as strategy, here on 4 hours, and on a quiet utility. When the market gets wilder, the tolerance widens with it. Lower it and you get fewer, stricter levels. Raise it and you get more, looser ones. So how do you actually use this? 3 things, and none of them is an entry signal. First, as targets. An untouched level is a magnet, because that is where the resting orders are. The panel keeps the nearest one on each side. Second, as context for a breakout. This level on Shake Shack, 4 hours, was cleared in April, and everything parked there was consumed in that move. And third, as a warning. If you are holding a position with your stop right under an obvious equal low, you are not the only one who put it there. Structure first, then the signals you use to trade it. Everything is adjustable. Let's open the settings. The first input is the swing profile, and it decides how far back and forward a pivot has to look to count as a swing. Scalper reacts to small local pivots. Swing is the balanced default. Long term only keeps the big ones. Watch the chart. On long term most of the minor levels disappear and only the structural ones survive. Cancel reverts it, so you can try the 3 of them without touching your setup. The rest of the settings. Let's open them again. Equal tolerance is the one we just talked about, as a fraction of average true range. Max levels per side caps how many are kept, so old ones drop off. Then the colors, buy side red above, sell side green below, and the gray used once a level has been taken. Label size, and a theme switch so the panel matches a light or dark chart. And the panel itself, you can hide it, move it to any corner, or change its size. Cancel, and nothing changes. The indicator ships with 4 alerts. Let's open the Create Alert dialog. The first 2 fire when a new pool appears, equal highs formed, and equal lows formed. The other 2 fire when one is consumed, equal highs taken, and equal lows taken. We use the formed ones to know where the liquidity is building, and the taken ones to know the moment it is gone. To recap. Edo Equal Highs and Lows marks the levels where price stopped twice at the same place, keeps them alive until something closes through them, and tells you when that happens. It does not generate entries and it does not predict direction. It shows you where the orders are resting. Edo Equal Highs and Lows is free and open source, and it is available for TradingView. Structure before signals, context before confirmation, clarity over noise. This is Edolab Markets, and we'll see you in the next video.